In today's video, I'm looking at penny stocks trading under $1 right now that are showing some incredibly interesting volume and price action. We are seeing a massive rotation into the micro-cap sector this week, and I've found 3 companies trading between 70 cents and 90 cents that are flashing major signals. One of these stocks just surged over 50% in a single trading session, and another is sitting right in the middle of the electric vehicle battery boom with a sub-$1 valuation. I'm going to break down exactly what is happening with these charts, the catalysts driving the volume, and why Wall Street is suddenly paying attention to these specific tickers. These aren't your typical stagnant penny stocks. These are companies with real operations and recent news that you need to see. Before we dive into the charts, if you appreciate this kind of deep dive market research and want to stay ahead of the curve on these fast-moving plays, do me a huge favor and smash that like button. It really helps the channel grow and lets me know you want more of this content. Also, hit subscribe so you don't miss our next alert. Now, I have to be clear that I am not a financial advisor, and this video is not financial advice. Penny stocks are volatile and risky, so always do your own due diligence, read the filings, and never trade with money you can't afford to lose. Let's get right into the first stock on my list, which has been absolutely exploding on the charts over the last few days. I'm talking about CBDMD Inc., ticker symbol YCBD. Right now, this stock is trading around 82 cents, but the volatility here is the real story. Just recently, we saw shares surge significantly in after-hours trading, moving up over 30% on massive volume. If you aren't familiar with them, CBDMD owns and operates a portfolio of CBD brands, producing a wide range of products including tinctures, gummies, and topicals. What makes this move interesting right now is the broader context of the cannabis and CBD sector. We've seen a lot of legislative talk recently regarding reclassification and regulation, which often acts as a rising tide for stocks like this. However, with YCBD specifically, the market is reacting to what looks like a technical breakout from its previous lows. When you see a stock under $1 suddenly trade millions of shares in volume, it usually indicates that institutional money or a large group of retail traders has spotted a dislocation in the price. The company has been working on streamlining its operations and focusing on its core revenue drivers, which is critical for survival in the competitive CBD space. For traders, the key level to watch here is that $1 psychological resistance. If the current momentum carries it through that dollar mark, we could see a classic breakout setup, but you have to be wary of the pullback. The company has faced challenges with profitability in the past, which is common in this sector, so the recent surge is likely a mix of speculative fervor and investors betting on a turnaround in their financial health. It's a high-risk, high-reward play that demands close attention to the daily volume levels. Transitioning from the consumer goods sector, I want to look at the industrial side of the market with our second pick, CBAK Energy Technology, ticker symbol CBAT. This company is currently trading around 88 cents, just under that $1 threshold. CBAK Energy is a Chinese high-tech enterprise engaged in the R&D, manufacture, and sales of high-power lithium batteries. This is a direct play on the electric vehicle and energy storage sectors, which are 2 of the hottest industries in the world right now. What fascinates me about CBAT is that, despite the massive demand for lithium-ion batteries, the stock has been beaten down to this sub-dollar level, creating what some analysts might call a deep value disconnect. The company isn't just a concept. They have actual manufacturing facilities and a history of producing batteries for light electric vehicles, electric tools, and energy storage systems. Recently, they've been focused on expanding their capacity and securing new partnerships. The battery market is fiercely competitive, with giants like CATL dominating, but smaller players like CBAK offer a different kind of leverage. If they can secure just one major contract with an EV manufacturer or a large-scale energy storage project, the revenue implications would be massive relative to their current market cap. The stock has been consolidating in this 80 to 90 cent range, building a base that technical analysts often look for before a reversal. The financials here are also worth noting. Unlike many penny stocks that have zero revenue, CBAK generates significant sales, though margins have always been the battleground. Investors are looking for them to optimize their production costs and improve their bottom line. If you are bullish on the future of green energy and believe that the demand for batteries will outstrip supply in the coming years, CBAK represents a speculative way to get exposure to that thesis for less than the cost of a cup of coffee per share. Moving on to the third stock on my list, we have a technology play that is currently trading around 74 cents. This is Smith Micro Software, ticker symbol SMSI. This company operates in a completely different lane, developing software designed to simplify and enhance the mobile experience for wireless service providers. Their flagship products include SafePath, which provides family digital lifestyle solutions, and View, which helps with retail display management. Smith Micro has been around for a while and has established relationships with some of the biggest carriers in the United States. The stock has come under pressure over the last year, pushing it down into this penny stock territory, largely due to shifts in carrier spending and the slow rollout of certain legacy contracts. However, the opportunity here lies in the turnaround narrative. At 74 cents, the market has priced in a lot of pessimism. But recently, we've seen signs that the company is aggressively cutting costs and restructuring to align with their current revenue run rate. For a software company, once you stabilize the cash burn, the high margins on your product can lead to a quick recovery in profitability. Investors looking at SMSI today are betting that the worst is behind them and that their core product suite, especially the family safety apps, will continue to see adoption by major carriers who need value-added services to keep their subscribers from churning. The tech sector has been rebounding, and often, micro-cap software stocks like this are the last to catch the wave. If they can announce a renewal of a major contract or a new Tier 1 carrier partnership, this stock could move very quickly back toward the $1 mark. It's a classic fallen angel setup where the technology is real, the customers are massive blue-chip companies, but the stock price is reflecting short-term execution issues rather than long-term invalidity. When you look at these three stocks together, CBDMD, CBAK Energy, and Smith Micro Software, you see a diverse cross-section of the penny stock market. You have the momentum play in YCBD, the sector play in CBAT, and the value turnaround play in SMSI. All three are trading under $1, which makes them accessible, but it also means they are subject to extreme volatility. The key with trading stocks in this price range is to not just look at the price, but to look at the volume and the news flow. Are people buying because of a press release, or is it just technical speculation? In the case of YCBD, it's clearly momentum-driven right now. For CBAT and SMSI, it's more about the fundamental valuation and the potential for a repricing event. You need to have an exit strategy before you even enter these trades. Don't get greedy if you see a 20 or 30% pop. Taking profit along the way is how you survive in the penny stock game. I'll be watching the level 2 data on all three of these this week to see if the support levels hold. I want to turn this over to you guys now. Which of these three sub-dollar stocks do you think has the most potential for a breakout? Are you betting on the battery tech with CBAK, or do you prefer the software margins of Smith Micro? Let me know your thoughts in the comments below because I love seeing what you guys are watching. Remember, do your own research, read the latest 10K and 10Q filings, and verify everything before you make a move. If you found this breakdown helpful, please smash that like button and subscribe to the channel for more updates on stocks moving the market.